Hello guys, welcome back again to the Profitable Traders. A few months ago, I made a video on 200 exponential moving average and it went viral. As a small YouTuber, a few thousands of views on a single video is a breakthrough. The video that I made on 200 EMA went viral because I demonstrated how profitable 200 EMA is when traded correctly. In this video, you will learn a strategy that combines the 200 EMA and 50 EMA, and I will demonstrate how profitable it can be. If you feel excited already, smash the subscribe button and the notifications bell so that you'll be alerted whenever we upload new videos. Without further ado, let's get started. As you can see in the chart here, we have the red curve and we have this blue curve. The red curve is a slow moving average, which is the 200 EMA, and this blue curve is a fast moving average, which is the 50 EMA. The 200 EMA is mostly used when the market is making massive pullbacks. This is where you use a higher exponential moving average. And when the market is making tight pullbacks, you can use 50 EMA or even 20 EMA. And now in this strategy, I combine a fast moving average, which is the 50 EMA in this case, and a slow moving average, which is the 200 EMA. And the rules for this strategy: rule number one, when a fast moving average, in this case the 50 moving average, is above 200 EMA, which is the slow moving average, you look for buying opportunities, and vice versa. When the 50 EMA, which is a fast moving average, is below 200 EMA, then you look for the selling opportunities. That's your rule number one. The rule number two, the market should make a lower low or a lower high before you get into the trade. What do I mean by that? Now we have this fast moving average, which is the 50 moving average. It has broken and it is now below 200 EMA. In this case, what you have to do is that let the market make an impulsive leg, then a pullback. At this pullback now, you have to let the market make another pullback that closes below the previous level of structure. That's your step number two. This for a lower low, and for a lower high, let's see here where this one is above. Yeah, now for a lower high, we have 50 EMA above the 200 EMA. In this case, you wait for a market to make an impulsive leg, a pullback, and another impulsive leg that closes above the previous level of structure. This is the one. What you have to do now is to wait for a pullback, then you get into the trade. So that's what step number two is. The market should make a lower low or a lower high before you get into the trade. Step number three, the market should touch 200 EMA but not close above or below the 200 EMA. What do I mean by that? The blue curve, which is the 50 EMA, is below the 200 EMA, which means we are now in a downtrend and we are looking for the selling opportunities. Now this strategy can be valid when this market makes a pullback up to here, touching here but not close above the 200 EMA. Now if it makes something like this strategy will not be valid because the market has broken above the 200 EMA and has also closed above the 200 EMA, then made a pullback. In this case, this strategy will not be valid. But if this market makes a pullback here but does not close above the 200 EMA, let's say here, then this will be a valid strategy. Rule number four, which is the last rule, look for a simple price action pattern or any entry reason for you to go into the trade. For me, I normally use price action patterns, simple price action patterns as my entry reasons. With that being said, now we have our 50 EMA below the 200 EMA. When this happens, look for the selling opportunities because the fast moving average is below the slow moving average. That's our rule number one. Our rule number two now is to wait for a pullback and wait for a market to make a lower low. And a lower low is when the market has broken and closed below the previous level of structure. Now, has the market broken below the previous level of structure? Yes, because the market is currently here. So this qualifies us to a rule number three, which says that the market should not close above or below the slow moving average, which is the 200 EMA. Now we wait for a pullback here that does not close above the 200 EMA. Now if we get a pullback that does not close above this 200 EMA but just in between or even below 50 EMA, then we look for an entry reason and we short the market. In this case, the market made a pullback here below the 50 EMA, and what do we have? We have a market, boom, pushed all the way up to here. This win could be here, depending on your take profits or your stop loss where you place it. This could be a win from all the way from here to here. This could be a win. Let's see how many pips are those. It's around 50 pips. Again, is 50 EMA below the 200 EMA? Yes. Now let's mark this to be a win. I will represent a win with green color and a loss with red color. Now is the 50 EMA below the 200 EMA? Yes. Do we have a pullback? Absolutely, we have a pullback that does not close above the 200 EMA. In this case, we now look for an entry reason and we short the market, and here it is. That could be a win. That's around how many pips? We have more than 100 pips from this move, and this could be a win. Let's represent it with a green arrow. Do we have 50 EMA below the 200 EMA? Yes. Do we have a pullback? Absolutely. Is this pullback below the 200 EMA? Yes. Is it below the 50 EMA? Yes. Now what you do here, you look for an entry reason and short the market, and here we are. This could be another win. We already have about 3 wins, if we had traded this market live. Now we still have the 50 EMA below the 200 EMA, and we have this pullback that does not close above the 200 EMA. The pullback is here, but it did not close above the 200 EMA. In this case, we can look for an entry reason and we short the market all the way up to here. This could be a win too. We have about 80 pips in profits. This could be a win too. This is a win. Our next one, do we have 50 EMA below the 200 EMA? Yes. But have we created a lower low? What I mean by a lower low is when this market would have made something that looks like this. If this market broke and closed below the previous level of support, this could have been a lower low, which is our rule number 2. But the market hasn't done that. The market instead made a lower high. It made a lower high that just ended here. And what does our rule number 2 say? Our rule number 2 says that the market should make a lower low or a higher high. But here the market failed to make a lower low. So in this case, I'm not going to trade even if it makes a pullback. So in this case, the market made a pullback here. Again, didn't make a lower low. made a pullback, made a lower high, made a pullback here and a higher high, and it came up and touched the 200 EMA. In our rule number 3, that the market can touch the 200 EMA but should not close above or below the 200 EMA. In this case, the market has touched the 200 EMA but did not close above the 200 EMA. Instead, it closed here below the 200 EMA. So this is valid. Now, what are we looking for? We're looking for a market to make a lower low that closes below the previous level of support. And what do we have? We have a lower low. Now we're looking for a pullback that does not close above the 200 EMA, and we got it here. Now what do we look for? Our rule number 4, look for an entry reason, then you enter the market. This one could be a win all the way up to here. Wow, how many pips? 120 pips in profits. So profitable. So let's mark this to be a win. When you use indicators correctly, they can be so profitable, and this is what I do on this channel. I'm mostly a price action trader, but there are some instances where I use indicators, and one of my best indicators is the moving average, the exponential moving average, because when traded correctly you can be so profitable. You know, we still have our 50 EMA below the 200 EMA, so we wait for a pullback, and this pullback should not close above the 200 EMA. It should be below the 200 EMA or even below the 50 EMA, and look for an entry reason to short the market. Now here, and here we have boom, all the way down there, and this could be a win too. Guys, if you are enjoying this video and you have not yet subscribed, would you subscribe and like this video so that you'll be alerted whenever we upload new videos, and also support this channel. It's a small channel and we're growing slowly, and we are giving free tutorials, free forex tips and strategies, so that you will be profitable and we will grow our channel. I think the video is getting long. I'll go faster now from here. Now we have our 50 moving average above the 200 moving average. What does that mean? We're looking for the buying opportunities. What I'm waiting for now is a pullback that does not close below the 200 EMA, but it could break and close below the 50 EMA. No problem with that, but it should not break and close below the 200 EMA. And we should see a higher high. A higher high is when the market makes an impulsive leg that closes above the previous level of resistance, and our previous level of resistance is right here. Now it has crossed and closed above it. What I'm looking for now is a pullback here, then I look for an entry reason, and I expect the market to go to the upside, and this could be an awesome win. Now I'm looking for a pullback that does not close below this 200 EMA, but it can touch the 200 EMA. No problem with that. It can touch, but it should not close below it. Then you enter the market, and what do we see? Boom, this could be a win too. And guys, the video is getting long. Let me just go faster. Now this market made a short pullback here but failed to make a higher high. In this case, I'm not going into this trade. I'm waiting for this market to make a higher high that closes above this level of resistance. And what do we have? We have this market came all the way here. Is this a higher high? Let me draw this horizontal line. Absolutely, this is a higher high. So what am I waiting for here? I'm waiting for a pullback that does not close below the 200 EMA and enter the market and expect this to be a win. Now I'm waiting for a pullback here and expect the market to go to the upside and expect a win. Absolutely, this strategy is so profitable, as you can see. If you have enjoyed this video, as you have seen how profitable this strategy is, combining the 200 EMA, which is a slow moving average, and the 50 EMA, which is a fast moving average, and just create a strategy around it. When the fast moving average is above the slow moving average, look for the buying opportunities, but don't just buy when you haven't seen a higher high, and don't just buy at the pullback without an entry reason. These are the things that could contribute to a higher winning percentage. And when the fast moving average is below a slow moving average, you look for the selling opportunities, and don't just sell when you haven't seen a lower low, or don't sell at the pullback when you don't have an entry reason, and also don't sell when the market has closed above the 200 EMA. These are the 4 rules that I use for this strategy. You take all these rules, follow them, you can modify them, you go and backtest them in historical data. As we have seen on Aussie Swiss, this strategy is profitable. We've passed through examples on the charts here in historical data. We found to be so profitable. But this is not the backtesting. The backtesting, you should have a large sample size, and from that large sample size where you can determine whether a strategy is profitable or not. This is just for the learning purpose, so take it, backtest it for yourself on different currency pairs and see by yourself whether it is profitable or not. Subscribe if you haven't yet subscribed, and like this video. If you have watched this video, I don't think there is any reason why you not like it. Yeah, maybe some people may not like it, and no problem, but if you enjoyed it, just give it a thumbs up and subscribe if you haven't yet subscribed. And this has brought us to the end of our discussion. Thank you for watching, and we will meet again in the next video next week, and I wish you a profitable week ahead, and also I wish you a Merry Christmas and Happy New Year too. Thank you.